Hey friends, this is Raghu here. Hope you're having a great weekend. Now this week I wanted to bring you some educational video regarding how to avoid false breakouts and also how to spot a breakout. Now I would like to quickly call out that can we have an absolute rules where we can avoid false breakout? Honestly, answer is no. Now, similar to the way in day-to-day life, how we cannot avoid any kind of accidents on road, personal life, or kitchen, or for that matter, big industries. So we can try to avoid them by following a set rules or a principles so that we don't get into unnecessary trouble and minimize the impact of accidents. Likewise, if we have a set rules to follow in trading, we can avoid the bigger losses by following a false breakout. But there are ways how you can absolutely avoid false breakouts or and have a minimal stop loss. For that, we need to follow the rules. Now, for the rules are, I use pivot. So this training video is based on pivots. So first rule is if the gap between a CPR and R1 or a gap between CPR and S1 is very small, avoid trading. Now this will help you to avoid the false breakouts. Simple, right? Then how you're going to spot the breakouts and avoid false breakouts, you know how to avoid. Point one, how you're going to spot the breakouts. So the previous day should be in range. Consolidation near the breakout of a previous swing high or low gives a higher probability of trend towards the breakout. So what I mean by consolidation is, I will walk you through the charts. So near the breakout, if the breakout is happening on the upside of the range, that range or the previous swing high, near that, not exactly near to that or little lower below, there should be a consolidation where market goes sideways and then gives a breakout. You have a higher probability. Avoid parabolic breakouts unless you are following EMA or some exit criteria. Now, parabolic breakouts, sometimes it gives explosive moves, but in a breakout trade, so if you are a trader who just focus on breakout, so what does this parabolic moves means? The parabolic moves means price is falling from a top. So it's falling from a top without pullback and just goes and breaks the range. Avoid these kind of breakouts because it is very difficult to trade them because you don't have a stop loss. You cannot keep a stop loss for these kind of breakouts. And most of the traders across the world are advised to avoid this. And if you apply this on pivots, as said, you have a higher probability breakout, especially this is very important, last but not the least. So if you want to trade breakout successfully, ensure that the price is near R1 or above previous day high or near S1 or below previous day low. Let's quickly go to the charts without wasting time and do I had some what do you call 2 months old charts, but let me go from the recent one. Okay, just quickly. Previous day in a range. Okay, this is a bigger range, but let's, if you make it small, half of the day market was stuck in a range. Next day price opens below S1, below previous day low. This circular area is the consolidation. Yes, this is already a breakout, but still from price action point of view, observe this consolidation. Most of the times you guys miss the trade looking at these green bars, but you need to watch that price is below S1, below previous day low, high probability trade. What happened to my charts? Just give me a minute, guys. Let me reload this one. Some problem in trading with since morning. My apologies. All right. All right, let's quickly move. Now this is something I just wanted to show. It is within a day, below S1, above S1 and below CPR. All the price is below previous day, last hourly range. What I wanted to show was you had a morning star market pulled back and near the previous swing. This is the previous swing. I just wanted to show the consolidation. Although this is a false breakout, look at the consolidation, eventually market goes up. So you need to keep a watch on these kind of consolidations. Sometimes just hitting stop loss, you should not be too scared. Watch out the next level of consolidation. One consolidation, breakout, hit your stop loss. Second consolidation, market goes up. Just wanted to show that. But anyway, for our rules, this is previous day range. Market comes near S1, it breaks, but near S1, you have a consolidation, market goes down. Same thing, previous day is in range, evening, morning star kind of stuff, although it is not at the top. Near S1, see the consolidation sideway, market goes down. Now here, it fails. This is previous day range, market is below S1. This is a small consolidation, two gaps, but look at the size of candles. After giving it, this is not a convincing, we can argue that convincing breakup, but nonetheless, it broke S1. But after that, no follow-up, market goes into a sideways consolidation, breaks again, goes up. So this is what I meant. Sometimes you really cannot avoid, but if you're really smart, the previous day we had a very tight day of small candles. And on this day, if there was no follow-up and looking at these small candles, you would realize there is no good risk to reward and you would avoid it. Previous day, down, sideways, near R1, it breaks out, comes down, but again above R1, it forms consolidation, breaks up. This is near S1 I wanted to show with the below S1, but near S2 and closer to S1. You have a lot of consolidation and when S1 is broken, it goes and tests CPR. Just wanted to show that. This is one strategy. I mean, if you follow pivot, this I did not mention in the rules, but any time near CPR, if a consolidation is happening and if a breakout happens, go with that side because it is a high probability trade. So you need to understand CPR is the heartbeat of the pivots. So it acts as support and resistance, and near this support zone or resistance zone, if market is consolidating and going breaking the top circuit of CPR or bottom circuit of CPR, you have higher probability. That's the reason I marked it. Previous day in range, below previous day low, near S1, although we had only one green candle. I just wanted to show this is again a kind of consolidation and then goes down. Market tries to give a pullback and then overwhelmed by sellers, it goes down. So this is another thing. So near S1, market previous day range. So the parabolic thing I said is above the range price opens, does not sustain, forms a very long red candle, comes down with some side. After red candle, two red candles, you have dojis, and doji, again, a decision is made by sellers to take down, but near S1, you have consolidation and pullback. Failed, what do you call, breakout, failed breakout. So you had a very limited stop loss here. Even if you had entered with this red candle, since it was not convincing, because this was again wick to body engulfing, but with the next small green candle closing above, with this candle you could have exited. So technically, sometimes you really cannot avoid the false breakout, but if you follow pivots, the amount of loss is very minimal or negligible because you can take a counter trade and make money. That is the idea of this video. Hope you understood. One last one. See this one again. Above the previous day range, market consolidates. Instead of going up, it's above R2 as well. Three big red candles, breaks S1. And since it's a big red candle, I would wait. What happens next? You get a piercing pattern and market pulls back. So this is what I meant. If you stick true to the rules, majority of the times you have great success. Previous day in range, price above R1, consolidates near R2, breaks up and slowly goes up. Right, this is what I want to show you. One last one and then we are done. Hope this is helpful. See near the CPR, break up upside, and previous day, last 2 hours was in range. So what is a way to avoid? The simplest way is avoid trading between R1 and CPR and S1 CPR when the gap is very, very small. Avoid if there is any breakout of this. So better is wait for S1 to break, allow the consolidation to happen. Once it breaks and you have the condition previous day in range, there's no parabolic falls from the top, you have a high probability trade. So I haven't used any market what you call terminologies to confuse you, who and I did not use any kind of uh, catchy jargons about price action. Hope it was simple enough to follow. Please do support me. I will be bringing more quality videos like this. There are a lot of strategies with me like this, and if you follow strategies within a period of time, you will develop a set of winning trades where it can be repeatable day in and day out. That's how you can become a successful trader. Thank you, team. Have a good day. Have a great weekend.